Welcome back. This is Chili Davis, and I'm back to do another video. Uh, Today's video is going to be about what would I invest in if I just started my stock investment journey today. And I'm going to look back a little bit, but it is July 2021, and I made a lot of good money in 2020. But I want to, start fresh, give some people a perspective. So I want to thank you for joining. Welcome back to all my subscribers and welcome to my new viewers. Thank you for stopping by. Please click the like and subscribe button and also click the notification. So this is my Robinhood account I'm in. And just to let you know, I haven't had it for that long. I started Robinhood back in April 28th. And just to show you, I've had a few bucks gained here. Dollar off of Amazon, Google, $3, CrowdStrike, $2, Snap, 32 cents, CMG, $2, and Shop, $2. So not that much money made on these stocks. But if I was going to start my journey today in July of 2021, I would look for stocks in the range of $19, $20 per share. I wouldn't look for anything in the $10 range. I don't like the $10 range. I think that stocks in the $10 range are very risky. I just don't feel safe because if you invest in a $10 stock, unless it's got a lot of history, chances are that stock can go to zero. Or I won't say go to zero, but it can fall as low as zero. So I wouldn't, invest in a stock that's less than $20 per share. If I was a brand new investor, I wouldn't invest in a stock with less than, maybe 2 years old. But I'm going to show you a couple of stocks that I think are helpful. Of course, you have your Microsofts, Facebooks, your Google, your Amazon. And I know people they like to focus on stocks that can buy and complete shares. But if you have to, buy $20 of Microsoft or $20 of Facebook or Tesla, it's okay. I'd rather buy $20 of a partial share of a good, high quality company than, $10,000 of a $9 stock that could go to zero within the next 6 to 9 months. That's these type of stocks right here: DD, Marin, AMC, Clove. If I was to start investing today, one of the stocks I would take a good look at is Palantir. Now, Palantir hasn't been out for more than like 2 years. As you can see, Palantir opened up last October at $9.95. I was fortunate enough to buy some, but I'm saying if I was to start investing from here, July 2021, I would look at a stock like Palantir because it's a technology company and it seems to be growing and they have guaranteed revenues. I just take a look at its max. It does have a 52-week high of $45. Its leadership: Peter Thiel, Alex Karp, Stephen Cohen. A lot of these guys are very familiar in the investor space. And like I said, they are basically a Silicon Valley company that transferred to Denver, Colorado. But for all intents and purposes, they are a technology company birthed by some great Silicon Valley founders. So I'd invest in a company like Palantir. I would not invest in any stock less than $20. Now, the only exception is if it was a REIT. So I'm giving you another stock that I would invest in. It's called Medical Properties Trust. Now, what does that mean, trust? You could call it a REIT. That means I'm going to go here. Medical Properties Trust Incorporated, based in Birmingham, Alabama, is a real estate investment trust that invests in healthcare facilities and does triple net leases. So what does that mean? Model Properties Trust is basically a stock based on a real estate, a piece of property. So it can only go but so low. And again, you know, you can look at the max of the chart. You're not going to see as much history. Well, actually do. So you could go back and see back in November of 2005, the stock was worth $8. And that's pretty normal over a 10-year period for a stock to double. So in 2005, the stock was $8. In 2016, the stock was $11. And here in 2020, the stock is $22. So I don't think that's a huge jump. But Medical Properties Trust is a company that's backed by real estate. So if anything, the stock, it always will have value. It's not going to go back to $0 or $2. I've seen that thousands of times with some of these memes and some of these IPO stocks. They go on low as $2 and $3 per share. So $2, or excuse me, $20 would be my threshold. And then I will look, you know, the $2 to $3 gains. I wouldn't look for home runs. I look for 10% gains. So if you have, I'm just giving you some numbers. Over a year, if you're to earn 10% on a $2 stock, on a $20 stock, that's $2. That's all that's expected on a stock. You know, 10%, you know, $2 or $3, something like that is expected. If you get more than that, if on a stock you get, let's say, you know, $4 on a $20 stock, that's a 20% gain. That's pretty solid. So in the beginning, I would invest in stocks like this, MPW, maybe get a 10, 20% gain in a year. That means 6 to 12 months. And the same thing here with Palantir. Palantir right now is sitting at about $21 per share. It's a little bit more agile. It moves a lot more. But I would look to get into something like Palantir at $20 and watch it go to $23 or $24 and sell out some of my position and maybe buy some more back in at $20. Now, just to show you long-term, this is just what I've done in the past. And as you can see, I've made well over that, but this is 2 years of growth. So in Tesla, over 2 or 3 years, I made 300%. That's abnormal. Now this could be Ford. This is about 2 or 3, this is about 2 years of work, but it's 80% in 2 years of work. So this is more likely to happen for a stock. And as you go down this list, I've got other stocks. Also, I would do bank stocks. This is another great place to be. Bank of America, in less than 2 years, I've made a little over 54%. So here's a couple other stocks. Bank of America. If I was a new investor and I was beginning my journey today, I would do something like a Bank of America, because banks generally, they go up with the economy and they're basically they're stable. Now, if the market does correct, just to tell you, this stock could go back to $25, you know, but, you know, banks in general are pretty stable about how they move. They fluctuate, you know, 1%, 2%. So like, if we look at Bank of America over the, let's just do, can't do that. This is the last year. Okay, before the crash of February 2020, Bank of America was trading at $34. So again, I was to take a look at some banks. You know, Bank of America, before the crash, it was worth $34. And I would assume it would stay relatively cheap at $34. And plus, you gave a dividend. So in the beginning of my investment journey, I would look at, you know, 3 things: price, at least above 20 something dollars per share. And then also look at what does the company itself do. Like banks don't tend to fluctuate that much, and that's a good thing. So I would look at banks and they pay a dividend. Palantir for a little bit of, growth so that you get a little bit more than a 10-20% per year. And then again, I would take a look at something like MPW, something that's relatively really stable. I mean, as you can see, over the last 6 months, $20 per share. It's not really up and it's not really down, but this is what we're talking about. Medical properties, this is something that probably is not going to go out of style much because it's backed by real estate. So I would take a look at those 3 stocks if I was beginning my journey today. Bank of America at like $35 per share, Medical Properties Trust, MPW, and Palantir Technologies, ticker symbol PLTR. And again, you could use Robinhood as a platform. Again, you can buy into Amazon, Google, CrowdStrike, Snap, but these are like billion-dollar companies that tend to be able to take the hits of like uncertainty in the market like we're facing right now. So this is where I would go if I, everybody can't invest in Amazon. Everybody can't invest in Google. Like Amazon trades at 3,200, 4,200 per share. So I would just go ahead and nibble. And also the same with Google. So those are the 3 stocks I would buy into. Again, Palantir Technologies, Bank of America, and Medical Properties Trust. So those are just my suggested recommendation. Also, I have this chart. If you do just want to create a watch list, watch lists is you don't buy into the technology, you just watch them. You can add some of these. These are really meme. A lot of these are meme stocks, but you got like FUV, Workhorse, Blink. I have Blink in my portfolio. GoGo, OTRK, Clove, SDC. So all these is short interest. These are the stocks that a lot of people are jumping on, trying to get a quick return, but be very careful with these. I definitely, if I was a new investor, I steer away from these. So again, I want to thank you for watching. Thank you for listening, and please like, share, and comment below.